Welcome to the B.F. Anderson Technical Report for August the 4th. Tom Lee says the 2022 bear market is over. Stock could hit new highs before the end of the year. Well, that's just an opinion, but I prefer to look at where the rubber meets the road, which is what's really going on. What we have to realize here is we have been, in a downtrend really for about 16 months. It's been quite an extended downtrend. Now, this is where you need to be very defensive. You need to be careful about what you're doing. Now, once you start the bottoming process, realize you're going to make a low, and then you're going to see rallies, and then you're going to make a low, and you're going to see rallies. So this could be the low, but it may be a bottoming process that we have to understand. You have to be very careful in here because this is where the new leadership in the stock market is going to pop up. Now, once you start the ascension phase, you're going to be glad that you accumulated positions during this period because once the ascension stage starts, the market will broaden out and there will be lots of opportunities. Now, I wanted to just step back a minute and just think about the long-term picture here because I do believe that this is somewhat an opportunity of a lifetime that we're dealing with right now, meaning that demographics are important. So if we go back to 1981, 1982, the oldest baby boomer turned 35 years of age. So when you're 35 years old, you're consuming. You're buying houses, you're having kids, you're spending money. And basically, when you reach 54, that's where all that peaks. So if you notice here that we started a major bull market in 1981, 1982, where the market went up dramatically for an extended period of time. Then we hit the bear market that started in 2000, which happens to be when the baby boomers turned 54. So where are we today? Well, the millennials are now the largest segment of the population. The oldest millennial turned 35 in 2016. Now, they won't turn 54 until 2035. So what we're saying is that you really want to try to concentrate on consumption-type stocks where millennials will be interested. Just like back here with the baby boomers, you had Walmart, Home Depot, Microsoft, those types of things that really drove the bull market for that during a period. So I do believe that there's a chance that we have entered a long-term bull market that could last for many years. Now, let's take a look at where we are today. The tides, which is one of our indicators here, has turned very positive here. We're actually getting a golden cross where the 25-day is crossing above the 50-day. So we're starting to see some very strong upward momentum here. So as you can see, here's the downtrend. Here's the beginning of the bottoming process. Is this the low? Well, maybe so, but we may retest it again, just like the prior graph. Now, here's the mid-cap stock, same thing. We haven't gotten the golden cross, but we're seeing some very constructive activity there. Here's the New York Stock Exchange, no golden cross. However, above the lower moving average has turned up, so it is on a buy signal. Small caps, same thing. We've got a good, strong movement here in the small caps. So basically, these indicators, including the S&P 500, you can see the S&P close to a golden cross. We're seeing much improvement here in this particular indicator. Now, on the aggression index, much improvement there as well. This is where we're comparing technology stocks or growth stocks to consumer staples, which would be very defensive stocks. So you can see here waterfall decline all during the bear market. We've now, it looks like a double bottom in here. We've crossed back above that lower moving average. Lower moving average has turned up. We're making a higher high after making a higher low. This is looking like an uptrend. Now, as you can see back here, that was somewhat of a head fake. We did the same thing, but it looks very positive to me. Other good news is the new lows have finally contracted below 40 a day. So we were down to 32. That's very positive. This is a key indicator for us. The Renaissance Fund, which is a ETF fund, exchange-traded fund, that specializes in stocks that have gone public recently. So if you get the IPO market moving, that's a very positive sign. So we have broken out of a base, and it looks constructive. Now, on the sentiment readings, like we mentioned last week, we've seen extreme pessimism in here that we haven't seen really since 1990. This is record setting. So the rule is once you go this low and then back up to this line, which we're basically at, That's usually the indication of a bottom. Now, I did want to mention that we need confirmation on another indicator. This is what we call the trend lines. This is a weekly graph of the NASDAQ. We want to get back above that 35-week moving average, which we're really getting close. I mean, it could happen. Now, we want to get back above that moving average for 2 consecutive weeks. And then also confirmation would come from the S&P 500. Same thing. You know, we're getting very close. We want to get back above that moving average for 2 consecutive weeks. That would really be confirmation that the low has been put in. Now, on economic indicators, you can see interest rates have come down, starting to stabilize. The price of oil actually is in a pretty powerful downtrend here, where we're actually breaking below the 200-day moving average. So it looks like maybe oil has put a top in. Now, on the financial stocks, we are seeing some improvement there. We want to make sure the banks stay strong and healthy. Now, on interest rates, I want to continue to mention something about interest rates. This is the 10-year Treasury Yield, which is currently at 2.748. We've got a left shoulder, a head, a right shoulder. Breaking down below that right shoulder kind of indicates that interest rates, along with like the price of oil, looks like they may be going into a downtrend. Now, just to kind of keep an eye on corporate bonds, this is the HYG, which is high yield junk bonds, basically, corporate bonds. As you can see, they're starting to look into a very positive pattern here. So if we get a positive bond market, along with, you know, reducing interest rates, that could be a real positive here. Now, on the yield curve, again, the yield curve has really gotten serious here. We've gotten down to a negative 0.3. Now, we're comparing the 2-year Treasury note to the 10-year Treasury note, and we have an inverted yield curve, which pretty much says the market is discounting a recession. Trend strength. On the NASDAQ, we've gotten to the highest reading we've seen in about a year, or in quite a while, really since back in this period here. We're at 50%, which is a very favorable reading, and you can also see the dramatic up move in the index. Now on the S&P, we've gone to a trend strength of 50% as well, so we're seeing much improvement in trends here. Now on the VIX, we're seeing the volatility starting to cool down. We'd like to see that below 20. We're seeing improvement, though, pretty steady on the VIX. Now, I wanted to talk about a pattern. Now, I'm not really a patterns guy. I'm more of a trend follower and trend guy. But what I want to show here is a pattern that we have noticed over the years of our biggest winners. Now, the first thing about the pattern you need to notice here is the S&P 500, or the market, is in a powerful uptrend, which we need to get to, which looks like might be starting to happen. But as you can see here with Tesla, this was Tesla back in May of 2013 when we first started getting involved in the stock. You can see here that volume went up dramatically, a dramatic amount of volume, and then you got what we call a gap up. But following the gap up, you then saw what we call an ascending flag formation, which is where, when you have a gap up, it's kind of like a flagpole, and if you have a flag, you can go sideways or you can descend, which you don't want because that can end up being what we call a round trip. But with Tesla, it broke out on heavy volume, formed the ascending flag formation, and it really turned out to be a great investment. So as I get into top 5, I just want to mention we are starting to see some of these patterns. This is In-Phase Energy, which is involved in solar power, renewables. However, they're in a very profitable sector of the industry. They make what they call a IQ8 microinverter, which is an inverter that converts the electricity from the sun to where you can then use it in your home. And you can see here where we got the gap up on very heavy volume, and now it looks like an ascending flag pattern that's following. So that looks interesting. We do own In-Phase, by the way. We own the stock, so I have to disclose that. Now, Celsius Holdings, this is a company that is in energy drinks. It just came out last week that Pepsi-Cola has announced an 8% purchase of the stock, so they own 8% of the company. Then the rumor is that Pepsi's going to take this company over. So unlike In-Phase is being driven by profitability and earnings, where Celsius is pretty much, I believe, being driven by a rumor of Pepsi-Cola acquiring the company. Here's a company called EQT, which is mainly natural gas, but oil and gas exploration, kind of moving sideways, not exactly a strong uptrend, but it looks like it formed a cup. It's now forming a descending handle, which is another pattern. But anyway, keep an eye on EQT. Lantheus Holdings, which is healthcare, continues to stay in a very nice, steady uptrend. Then we have Scorpio Tankers, which is oil tankers. Got into a little bit of trouble here, but broke out, starting to move back into an uptrend and moving somewhat sideways. Now, I wanted to leave you on this quote that we've used before. Remember, bull markets are born on pessimism, which we've got a ton of right now, or have had. They are grown on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. This is very wise advice, and why those sentiment readings that we refer to are so important. So if you have any questions, please feel free to give me a call. Thank you very much.